If you get CPI hot this morning, like higher than expected, forecasts are 2.3, okay? If you get CPI this morning that's like 2.5, like it doesn't move because it's currently at 2.5. If it doesn't move from 2.5, the market's going to say, oh, rate cuts are going to slow down, and certain areas of the market won't like that. Gold will not like that. But if you get the opposite effect, if inflation comes in at 2.3 or less, I would say the party continues on. Specifically for stocks. That's what I meant by that. Like if you get inflation that continues to just kind of cool in line with expectations, again, let's map out our inflation. It's important that you understand the context of these things. I put out a tweet this morning. Most traders just are scared of the big word CPI, but they don't even know what that means. They just know, oh, CPI make market big boom, right? That's just like monkey brain stuff. Don't, understand what it is actually telling us. It's giving us a reading of US inflation, which is really, really important to the economy. We've had falling inflation. It's been a positive thing for the state of markets. So as we get close to this event, what I want you to understand is that we are likely to see trends continue if the trend of inflation continues in the downwards direction. So what do we want to see today? Well, it depends what you are trading. But if you are like me and you're bullish on the indices and have been sitting in some positions, right, then you want inflation to keep cooling. Inflation will help interest rate sensitive names, companies, indices. And you know what inflation cooling would help a lot? Well, I know a lot of you guys care about it. Gold. Gold would go up most likely if you get more cooling inflation data. So as we scope into this next inflation report coming out in just 5 minutes, it will have big impacts on many charts. All right, let's see. CPI coming in here now. Dollar index is higher, indicating potentially hotter than anticipated inflation, but the moves are not huge for the S&P, NASDAQ, Dow Jones. Gold and silver are up. I'm going to go ahead and throw my guess out there that we got 2.3. 2.3 is my guess. Let's see if I'm right. 2.3. Price action reaction tells me 2.3. I could be right. I could be wrong. 2.4. Okay. 2.4. So inflation cooling, but not quite as fast as people were anticipating. So what's that going to do? That's going to likely be somewhat, well, actually a really clear reaction here from the Russell. The Russell, which is very rate sensitive, doesn't particularly like that. What is a bit confusing to me, why does gold like that? Why is gold up on inflation not cooling as much as expected? I'll tell you this, right off the bat, where I'm most convicted currently in the markets, I'm long the indices. This doesn't change the story for me. Okay, we got 2.4 rather than 2.3. Big deal. We're still close to 2. Fed's still going to cut rates, maybe a little slower, but company earnings still good. So with the stock market side of things, any dips are actually a blessing for me because then I can find some opportunities to maybe get long. Interesting reversal here on gold. This is not your friend. If you gambled, not your friend. These candles are horrific. The only people that like this kind of candle, do you know who they are? Options sellers like those kinds of candles. When you sold premium here right before, you loved that because then if there's no movement and you sold options, those options become very cheap, very quick. And if you sold those options, you shorted the options premium, you looked great. Look at that ugly, ugly candle.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Couple markets I'm looking at.
Okay.
At the moment, I'm in 2 trades. Well, you say market chart of the day, but I've actually taken this position about a week ago.
Okay.
But yeah, it's taken its time. It's obviously chair for short last Tuesday after coming into some nice areas up here. But I'm looking for some downside with this one. Saw some nice momentum early this week, and I'm hoping that CPI can give this one a bit of a kick. And I'm also short on pound yen as well, which this one I've been holding for even longer, for about almost 2 weeks tomorrow. Hasn't been going well. It's been going against me, but my stop loss is still above the high, so I'm still going to wait to see if price is going to hit my stop or come back into profit. I'm really bearish with the yen pairs. I do think there's a lot of downside for them. A lot of the yen pairs have come up into some nice areas where I do think they can turn around. CAD yen in particular, euro yen as well, dollar yen as well, but I was a bit dodgy because of CPI. New Zealand yen struggling at this high here as well. So I'm really bearish with these yen pairs. I'm in pound yen, hasn't moved well, but we'll look to see if that can change around. But yeah, those are the 2 markets I'm looking at.
Okay, yeah, fair enough. Those yen pairs, of course, have been super volatile recently. Dollar yen's had a big move up here recently, but as you just showed on your chart, kind of hitting up against a level of resistance. We'll see if that holds. Same question to you, Marko. Top chart that you're looking at today.
Yeah, sure. So for me, my eyes are on the euro pairs. I don't like this candle right now. Maybe in the next 10 minutes we can get this candle to pick a direction. So I wanted to either clean close on the top or clean close on the bottom, meaning leave no wick. Currently it's leaving a large wick up and a large wick down, which is the absolute worst scenario for me. So let's see how this candle closes. I would prefer for this to close bullish because I'm seeing a very high probability pattern in the price action, where the price is just breaking these lows, and each time it breaks them, it is struggling, meaning it's building momentum to the upside. So it's still pretty volatile. Still, we're gonna see. EJ, my bias is for this thing to go down. We are breaking these major highs. Each time we break, we retrace, and we're forming a high probability ascending channel right here, which is a bearish pattern. So I am expecting this bearish momentum to continue. I had no opportunity to get in here, but if this can go down a bit more, I will definitely be looking for sell setups. So those are my 2 main pairs. For the rest of the pairs, Aussie US dollar, actually it's not looking that bad. It's printing a bullish candle right now, so if it can print a bit more bullish momentum, I would be interested for buy setups. AJ is gonna be pretty corrective for me right here. I'm gonna be more patient. Pound is also printing that clean descending channel, which is a bullish pattern for me personally. So if we can get the signature, if we can get the bullish momentum, I will be looking for buy setups. Until that happens, I will be more patient. And NJ is gonna be pretty corrective and flat in this area. And also, I wanted to ask you, so I started forward testing with the Edge Finder, and it's really interesting piece of software. I have seen a couple of times where my technicals align with the fundamentals, and then it's an even better trade. So I'm doing some forward testing to see how I can implement it. But I wanted to ask, so do you manually input any of the data, or is everything automatic being picked up from a server?
So we have, that's actually funny, Marko. We have like an internal joke within our office. We've had somebody, you can imagine that, as a software team, we get a lot of most 95% of people are very lovely and very happy. And then you get some people who are not happy and they always complain about stuff. Like that's going to happen with every business. But we had somebody who accused us once of none of this actually being automated, all of it being manually inputted. And I just thought that was the funniest thing in the world, because if we were to manually input all of this stuff every day, my full-time 24/7 job would just be sitting here crunching numbers and adding it to the Edge Finder, which no, so it is all automated. There is nothing manually inputted on the Edge Finder, which would be the most painful thing ever. So no, it's all manual.
Yeah, I thought because of the commitment of traders is a big document, so I thought at least you maybe need to do that manually, but if you found a way to automate it, that's great.
Yeah, and also for you, Marco, and for anybody else who would like to read up, you might have already seen this, but if you go over to our website, a1trading.com, we spent so much time on this, just doing write-ups on every different feature within the Edge Finder, how the scoring works, how the Edge Finder functions with it. But this is a pretty cool, it's basically our free course on the Edge Finder. If you want to learn our methodologies and what's behind it. For listeners, you can go over to a1trading.com/edgefinder-tour. I just dropped the link in the chat if you want to check it out. Thank you, Marco, for the plug for the Edge Finder today. That is absolutely awesome. But
yeah, no worries. It's cool because I have some trades where I'm not sure if they are high probability or valid. And then I tend to stay out. But if I can get the extra confirmation from the Edge Finder, from the fundamentals, and I actually get in, it's going to be a pretty good trade. That's at least what I found.
Well, when we designed it, and I promise to everyone listening, this was not like an intended. This is not a sales thing right now. But when we built it, we really did intend for it to be. This is not Trader Nick's methodology only software. This is meant to be sort of a more universal tool that traders who have their own styles, ways of trading, markets they watch. The Edge Finder is not built around me or my style. It's built around just generally market scanning, stuff. Everybody, inflation numbers like we just saw, CPI is going to impact charts quite a bit. So I think that where we fill a gap in the market as a team is fundamentals are like this way up here, hard to understand thing. The fundamentals trying to bridge that gap a little bit and just make it easy. So that is, why we do what we do. But thank you for the testimonial here in front of 1,300 people. To everybody, you heard it here first. Get the Edge Finder. Marco stamps it with his approval. So
yeah, it's pretty cool.
Yeah. Anyways, let's keep going. Miko, gold has been interesting. Gold's been in this monster uptrend this year. I'm kicking myself because I wish I just stuck my whole account into gold and never touched it this year. I would have had a much better trading year. I didn't have a bad trading year, but I would have had an incredible one if I just stayed long gold the whole year. But of course, I'm kidding because hindsight is 2020. But I wanted to ask your thoughts on this. Is gold in the process of topping out, or is this just a pullback before the trend continues? I'm curious your thoughts on gold or silver, as I know you watch those markets.
So yeah, I'm pretty bullish still with with gold. I think with gold we've seen a lot of momentum in the past few months, but certainly in the past few days, few weeks. So I think naturally gold is just going through a bit of a retracement, a bit bigger of a retracement. So I'm still very bullish, and I'm looking for opportunities to take price higher. Areas I'm looking at is around 25.80. And also 25.60, so this low here. So if gold was to get there, start to see some evidence of wicks bouncing, I'll be looking for some entries. And my thought process is I'm expecting gold to keep pushing high until I see some clear signs otherwise. So sustained moves down, big bearish momentum, consistent lower lows and lower highs. That's kind of what I'll be on the lookout for with gold, because although things are already bullish, at some point we will see a bigger correction, and we'll go through maybe a consolidation or a big pullback at some stage. So that will happen. But for now, I'm still very much in the expectation that gold's going to keep pushing. So yeah, I'd watch out. I think intraday, probably this area here might be a bit of an obstacle. Maybe it might send price down and give us the opportunity to get long. But from a bullish standpoint, 25.80, 25.60 is kind of where my interest is.
I like that. And I kind of actually agree with you on the long term. It's a bullish trend. It's hard to fight it. I mean, this year has been a monster year for gold bulls, and I've been bullish pretty much all year until recently. I actually sort of flipped some of the more, fundamentals without going into that too much. Basically, have shown me like, okay, the dollar's looking kind of strong here. We may see some dollar strength in the short run, and I do mean short run, because I don't think gold is going to be. I don't think gold's going flying back down to 2,000 an ounce or anything. I'm just kind of saying we've had a really strong run. We've seen some signals on the 4-hour chart that I see that have, some of that momentum has lost. We've rolled over, and I don't think it's out of the question that we could see a bit of a retracement move, maybe down to, as you just mentioned, that 25.60 level of support. And then I think you get cautious if you're bearish, because now you're coming into a year for the bulls. So could this thing have a bigger retracement? Yes. And as you pointed out, it certainly will at some point or another. The question is, will it be sooner or later? But I do kind of think that gold has some room to test this level, maybe go test some key levels of support since we've been teetering up here at the top, but we'll see. Marko, same question to you. Are you watching gold? What do you think about all this move recently?
Yeah, let me take a look. So on the 1 hour chart, pretty corrective. It kind of looks like Bitcoin on the daily chart, doesn't it? Like in a big descending channel.
It does.
Pretty corrective. So I couldn't really pick a bias right here. I think it's just going to follow that structure for a while until we get a breakout of one of the trend lines. But if I put it up to the daily, let me take a look. The daily seems to be just a bit of a pullback. Yes, we're getting some selling pressure. Right here, for me, this would be kind of a flag formation where I would actually be looking for buy setups, to be honest. So I'm still not convinced that this is going to go down. I think the pressure is still up, especially if you look at these legs of momentum, pretty nice, pretty strong. So I would say this can very easily go to the upside and continue going up, at least on the technicals on the daily chart. For me to go bearish, I would need to see like a big fat red candle that is much bigger than these blue ones. That would be a big confirmation of a bearish market.
I think if you're going to get like a real shift in momentum for gold, you really start questioning, okay, you need to start seeing some serious lower highs, lower lows on the daily chart. And I do think, I'm talking about potentially trying to get fancy with some short-term bearishness, but I'm also well aware that you're talking about trying to short in a very strong uptrend that has just been so dominant this year, and almost all money on the short side this year has been just thrown away money. So doesn't mean that it can't change, doesn't mean that we can't look for clues that maybe it will, reverse at a time. But anytime I take something that I know is pretty contrarian on a price action standpoint, my sizing goes way down. So I just take a smaller position. If I like it enough, I might still take trade. So I'm talking about possibly trying a short position here, but it's going to be small size. And if it rallies, I got to just get out of the way because it's one of those things. So next one I want to ask you guys about is the indices. The S&P 500 yet again has broken through the uptrend. Yesterday we had a long conversation on the stream, myself and Chris Pulver, who's a regular stream guest as well as you guys. We just talked about how, this is just the importance of recognizing a momentum and moving market. It doesn't matter if it's the indices or gold or whatever, but if you're just looking at a chart like this and it's just trending one way, it's just a real hard thing to fight. We just got done talking about that with gold. Indices are sort of the same story. You've got this uptrending market, this thing that just seems to not want to quit. What are you guys' thoughts? We'll go Miko first on NAS, S&P, Dow, whatever you want to look at.
So yeah, it does look like the strength is back alive again with the indices, because we were consolidating for a few days there, but a really strong close at yesterday's candle. Same with US 30 as well, not quite to the highs. I do like NAS though, because with US 30 and S&P, these kind of like a fresh highs there, all-time highs, whereas with NAS, we're not quite there yet. So I expect this one to follow along and catch up with US 30 and S&P. So if I was looking to get involved in the position, I'll be looking for opportunities to buy NAS. It would either be on the retest of the high here or the retest of the low here. Or if I'm looking a bit more intraday, I might be looking at the retest of the high here if we can get a nice break and retest there. But either way, I would be looking at buys because I would expect us to get to the high there at 2,700 sooner or later. It's just about kind of find the entry for it and ride that up. So yeah, very bullish on the indices in general, and probably going to see more upside. But I think NAS is the one with some really nice potential.
I actually like that a lot too, Miko. The NAS is the one that I'm personally looking at the most closely right now for a lot of the same reasons, both on the technical side. I like that we have room to go back to get to the highs. We've got some from where we currently trade, that's about a 2.5% move up, which could leave you with some good opportunities if we do see the trend kind of chug along. Yeah, real good stuff. Marko, same thing. Any of the indices, S&P, NAS, US 30, whatever you want to look at. What do you think?
Yeah, let's cover the S&P.
Okay.
So on this 1 hour chart, we're getting a definite uptrend on this last couple of days. So it looks pretty good, looks pretty bullish. Now breaking the structure a little bit, but that is just how the S&P moves. So it's not that unusual. So bullish on the 1 hour. The daily is going to be very bullish as well. I mean, just no sign of stopping this train. We're also getting these bullish patterns, V reversals. So I just don't see this thing slowing down anytime soon. Yes, it's not as impulsive as it was right here in these legs, but it's still just trucking to the upside. We had this bit of a correction when everyone got super scared, but then we recovered even more quickly than we went down, which is pretty interesting to see. So I think this is gonna continue going up. At least that is the probabilities, what the probabilities are telling me. And I just don't see any signs of stopping. I'm not seeing any big bearish pressure, any breaks of structure on this daily chart.
So anyway, just took a short on gold. Basically, simple setup. We've got the level of structure here. We've broken below, retesting, met this 0.5 level. Also seems to be holding below this 200 moving average. We've also got gold as the most bearish reading on the edge finder. So yeah, gold shorts look pretty good at the moment. This is only on the H1, so we'll see how it develops, because obviously the higher time frame you could still argue is very bullish, but yeah, we'll see. It's a little bit of a testy one. Still in my US dollar NOK short positions. These are, again, this is a position trade, as I explained yesterday, so you'll probably see me talk about this one quite a lot over the coming months, if I'm still around in a few months. So yeah, we'll see how this goes. New Zealand US dollar, I saw someone in the chat talking about this one. I'm still short. I actually placed a new entry on this one, I think it was last night or this morning. So I'm still very bearish on New Zealand US dollar. Obviously, we had pretty weak CPI or news today, really, for the dollar, obviously pushing this market up. But I don't expect it to be too aggressive, really. I think this trend will continue. I've got my stops just above these moving averages here. And I'm basically going to keep scaling short positions into this market because it's essentially no-brainer. I can explain why. I'll go over some fundamentals for this one later. I'm also in oil. I saw Nick was in a very similar position. It might actually be the same, almost the same maybe. So yeah, long on oil. This is a little bit of a gamble. Well, I use the word gamble lightly. Sorry, just give me a second. Having some technical difficulties today. My monitor's just turned off. It's all right. I assume you can still see this one though. So yeah, still long on oil. The reason it's a little bit rocky is because this oil position relies heavily on geopolitical situations with the Middle East rather than great fundamentals. It's actually on the edge finder. If I can find my browser, there we go. So it's on edge finder here. We've got a bullish reading, so that's also a nice factor that we've got. James, have you been bulking? No, I'm just fat. So yeah, bullish reading on edge finder. We've also again got supply concerns with the Middle East, so this one is kind of there, but I was really short on oil not too long ago, so that's why I'm a little bit on the sidelines on will it work, will it not work. Also still short on the US dollar Mexican peso, but this one looks probably going to get stopped out within the next hour, I would assume. Short gold? Yes, short gold. No, I may not be fat, but I've definitely, gained weight. So I used to live in a big city with gyms, and I had friends I'd go on runs with and rock climb and all sorts of stuff, very active. And now I live in the middle of nowhere, so there's nothing to do other than trade and eat and sleep. Hi, James. What's your opinion about the DXY? Yeah, let's have a look at the dollar. So I've got it all nicely annotated for you guys to see here. So we had inflation, obviously CPI. We also had jobless claims. Now, jobless claims seems to have been pretty, well, not muted, but it's not like the biggest factor of today. CPI was obviously in the main scope or the main focus of people. So what we had was inflation 2.4. So it came under previous, but didn't quite meet targets, which Yeah, not great, not bad. Jobless claims is quite concerning for the labor market. So jobless claims came out at 258K, which is above previous and above expectations. So again, really not that good. So I still remain on the seat of a 25 basis point cut. I don't think we're going to get 50 again. I just don't see that as a realistic thing. I just don't see how that would benefit. Being super aggressive, 100 basis points, not great. Hey, what do you think about Euro Yen? So I'm actually looking to go long on some of the Euro pairs. I'm just not sure which one. It's probably going to be Pound Yen, but I've not fully planned that position yet. So with the Euro, I think the downwards trajectory that we're on is going to continue. I just don't see any redeemable factors for the yen at the moment. Actually, let's pull up some of the data for the yen. Give me a second. Let's have a look here. So their GDP is what we want to see. So if we have a look at the yen, it's not great. So we've seen forecast of 0.8 came out at 0.7, so we've had a decrease. We did have one pop, but again, back to slip into the downside with GDP. We've still got no rate hikes coming from the Bank of Japan. So yeah, overall, there's just nothing really redeemable for the yen. So I'm expecting all of the other G10 currencies. So we've got the yen, the pound, the euro, the dollar, all to outperform over the longer term. It's just more a case of how do you navigate through all of this noise. Trying to get in and out during this period is very difficult. So what I'm really looking for, all of the yen pairs look very, very similar. They've all created this resistance level. So really, I'm looking for a very clear break, a retest, and a continuation. So once we get that retest, I'll start entering and start positioning more for a buy position. But yeah, at the moment, it's a bit too early. Bashi got 30R today. That's great. Pound dollar in the near term 1 week. All my money is in GBP. Yeah, so when you say your money's in the pound, do you mean buying or selling? I'd assume you mean buying it. But yeah, I mean, I'm just having to think. Pound dollar isn't something I'm overly interested in. Technically, it looks quite good to go long. The problem is we've got both of the central banks cutting their rates. And it's just, there's not a clear divergence. There's no clear factors here for me to be saying, okay, pound dollar is bullish, it's bearish. There isn't anything there. Whereas with euro dollar to the short side looks really good. So we've got the Eurozone economic weakness that seems to be quite persistent. We've got the European Central Bank that is going to be cutting rates more aggressively, it seems, than the Fed. We've got, obviously, the Fed cutting rates as well, but it shouldn't be, again, as aggressive as the ECB. And we do still have supportive factors for the dollar, whereas the euro doesn't seem to have very much at all. So what we can see on the daily is we've rejected this 200 daily moving average almost perfectly. In fact, I think it was perfectly. However, we're now stuck because if we are bouncing to the upside on the daily, we've just rejected to the downside on the weekly, then what can we do? Well, we're going to have to really try and catch some sort of pullback here. So I think somewhere around here would be the ideal spot. So if we go short on the 50% level, possibly a stop at the previous high. I'm quite pessimistic on the euro dollar. So really, if you were looking to be in a longer term position, I wouldn't mind targeting the low sort of down in this area. And obviously you more than likely will need to hold this into the end of the year or even Q1 next year. But that's my overall projection or expectation.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.